All right, welcome back, everybody, to the Rebel Trading Group podcast. This is episode 6, right?
Episode 6, yeah,
March,
baby. What's
March,
up? It's the gluten-free
March,
Jason Vessing.
March 30th, 2018. It is Good Fridays, and the market is closed today.
Good Friday today. It is a good Friday.
Yeah, so
Unfortunately, the market was close. That was a bummer. And I didn't really realize that until about the last hour of trading yesterday.
yeah, I think there's like
But
7 days out of the year. We've already hit 3 of them that are like closed during the week. Like Christmas Day, New Year's Day is one, Easter's one, 4th of July.
well,
Um,
Easter's a Sunday.
well, I'm okay. Good Friday. I'm sorry.
Yeah. Oh, okay. Okay.
So
Thanksgiving,
yeah,
what have you.
all those, and there's like half days on like Christmas Eve and stuff like that.
Yeah, those half days are stupid where it closes at like 1.
Yeah, it's pathetic.
What are you doing, bro?
Just
Like
finish the
just
2 hours.
dude, like seriously. Who's come on. We all trying to make some money.
Yeah. Well,
Leave the
so
casino open.
how did the market do this week? Since it's the end of the week, let's give the end of the week report.
Oh, yeah. End of the week. Yeah, it's Friday, baby. The Dow up 161 points, so that's really nothing
On the
sideways.
week,
S&P on the week,
that's nice.
right? It was a volatile week though. Yeah, she had some nice swings. She had, about 800 point swings.
She was
So
up
if you
four
played the
percent
Dow,
yesterday.
S&P down 5 points, so that's nothing. Nasdaq small move down at 108 points, and Bitcoin large move at while we're recording it is trading around 6,800 US dollars. So
Let's see how they do today.
Bitcoin just taking it on the
Yeah,
chin.
it hit around
You know,
6.7
dude,
today was its low.
Peasley said taking it on the chin on his podcast on Tuesday.
Did he really say that?
He did.
Man,
He said, dude, oh, you got to go back and listen to
I'll
it.
have
It's
to
great.
watch it. I'll have to watch it.
It was sometime this week, so it was Tuesday or Wednesday. Don't quote me.
Okay.
And I just laughed. But yeah, taking it on the chin.
We talked about that last podcast, didn't
Chin cast. Yeah, we did, and you laughed.
we? Because it's kind of funny.
It's not sexual, Nathan.
All right, so today's topic, we're going to be talking about volatility. Um, what do you like about volatility?
Volatility.
What is? Do you know what volatility is? Should I read the definition? Let me go ahead and read
Um
it.
can I give a poor man's
Yeah,
an average man?
give me the poor man's, and I'll give the definition.
Okay. Volatility is basically a measurement of rapid price swings on a stock or security. So it's basically the subject to rapid change in price. So something that is $20 and moves $10 a day is very volatile. Something that is $10 and trades a penny a day is not volatile at all.
So, what would you consider? What out of the assets you just named would be the most volatile?
Stocks.
Really, you don't think Bitcoin's more volatile than that?
Well, of course, of course. Do you call that an asset? Is
Of
it
course,
property? Is it
yeah,
currency? Is
yeah,
currency an asset?
yes. Why not? It's an
Okay.
investment vehicle that gains interest on your assets.
Well, not now. It's not.
What do you mean? Oh, I mean,
Well,
it's
Bitcoin's just
losing interest. Yeah.
plummet. Well, I get what you're saying, though. Okay, yeah, we can start there. Cryptocurrency definitely being the most volatile of anything. We've seen, 20% swings in a week and 6% moves in a day. She's actually down she's down over 6% today alone while we're recording
I
this.
saw 100% swings in less than a month.
Yeah, I remember watching her go from 10,000 to 20,000 and like, how fast was that gap?
I
Two
bought
months?
I bought in around 8,000 and watched it go to 16,000.
Jesus, Nathan. But yeah, so that's a very volatile asset. It is very, very, very volatile. Rapid price movements, rapid price swings, but that's good sometimes.
Yeah,
Sometimes we like that.
yeah, that can be
We
very
like
good.
that. That's how you make money. There
So,
needs to be buyers and sellers in this market.
so the people on Investopedia are saying that volatility is a statistical measure of the dispersion of returns for a given security or market index. It says it can either be measured by using the standard deviation or variance between returns from that security or market index. Commonly, the higher volatility, the higher the risk of security, or the riskier the security. Because basically, Jason gave it. I think you gave a better definition.
I definitely gave it better. I gave the working man. I gave the
That's what
description that
that's what
a
we're
human
about,
being can understand,
and that's
and
what we're about.
that's why I am here, baby. I love you all. But yeah. So um, Nathan,
Yes.
why do we like volatility though? Like volatility is scary. Okay, before you answer the question, let's talk about stigma. The stigma of the stock market, before anybody is educated, is stocks go up and stocks go down and stocks go to zero. It's absolutely true. However, stocks going up and down, it has to happen. Like it's just a natural part of the buying and selling process. If it's a good company, the stock will always go up. If it's not a good company, yes, the stock will always go down.
Yeah. We were talking about it the other
So,
day, especially like there's always ways to make money in the market, you know. And without volatility, you're not gonna like, if it stands still, how are you gonna make money? You can't just it's basically just a savings account at that point. It's not
mhm,
doing anything without volatility.
mhm. So why do we like volatility though?
Well, I mean, I feel like I just said why we like volatility. Why do you like volatility?
Yeah. Okay, so you watch something. Okay, this is why I like volatility. Something is at $10 a share. Now let's just call it, Ford Motor Company. Trades around $10 a share. But if you watch the patterns and the price swings that these trends that the price movement makes on a chart, which is available on any sort of basic stock software. If you just become accustomed and watch those volatile swings, you start to identify these patterns and learn price swings as to where you can buy in for cheaper discounts and sell for higher premiums. So as you identify these patterns and these waves, you learn how to buy the bottom and sell the top, or at least try to. And that move in volatility is making you money while Wall Street is moving millions upon millions of dollars. You get to ride that tide.
Well, I think if that's the case and it is pattern like, don't you think it has a lower volatility then? Because if that's its range, then that's its range. But if it's had like abnormally high highs, and that's a key word is abnormal, an abnormally low low, then it would be a higher volatile stock. But if its range is consistent, I feel like it would be more lower volatility.
hmm
What do
Well,
you
I
think?
mean, there's always extreme volatility. I guess the way I'm trying to put it is
Because
that
like a stock could
there's
go
always
from
ranges that break, and then that whatever that push through, whether it goes up or goes down,
because the stock
basically
can
causes
go
some sort
from
of volatility.
Bitcoin can go like it has huge swings, like $100
hmm
swings, and they look like waves on an EKG. You can like time them almost perfectly.
Yeah.
But like you consider like a pattern like that more volatile than something like that. What Bitcoin actually does is like it does like huge or bigger swings later. I feel
hmm
like it's like this like weird mix with Bitcoin. It's like most like during like steady points or steady periods, it's like less volatile. But over like a month or two, it's like super volatile because you don't know which direction it's going.
Yeah. At the end of the day, you might be up or down 3%, but at the end of the month, you're going to be up or down like 14%.
High or low.
Prop. Yeah, and it's going to be either way.
Yeah. So speaking of like low volatility, excuse me.
Volatility. Fuck LA.
There's things such as like volatility and low volatility. What's the difference between high volatility and low volatility in regards to stocks? Like I know there's high volatility stocks and then there's low volatility stocks. What would you say an example of both would be and why?
An example of both. Well, let's go ahead and go right back to last episode. The last stock you were watching, HEAR, Turtle
Oh
Beach.
baby, yeah, that's a volatile one.
That is a volatile beast, and here's why. It's a company that doesn't make money, and it's bound to be delisted from the exchange any day now. It has such a low market cap that it is no longer allowed to trade on the exchanges, and people are just trying to play off of the pennies. So this thing will move from 67 cents to 42 cents to 48 cents to 53 cents. And it has these rapid price swings that are just up and down, and it's completely volatile. However, if you look at the S&P over the course of a week or a month or a year, it is not volatile. You know, it does go up, it does go down. There are swings. We just saw a 10% correction, but that's the first time in 2 years.
Yeah, they were saying.
There's stocks that go down 10% every year. You know, there's stocks that go down 10% left and right, but for the entire market to do so is another thing. So this act of low volatility causes a boring market. And when everything keeps going up and there's no volatility, there's no value in the market. It's hard to get new buyers and sellers to want to do things because there's no push that's coming in from either side.
So more buyers and sellers create more volatility.
Well, absolutely. The more money that comes in or out of the system is going to cause what's going to cause those price swings. If everybody tomorrow says they want to pour more money into their retirement accounts,
So
everything's going to skyrocket.
yeah, my
Vice
favorite.
versa. If everybody wants to panic out like 2008, everything's going to plummet.
What determines like there's got isn't there the ETFs that only carry low volatility stocks.
I think
What
there's one SPLV.
Yeah, SPLV is volatility. Excuse me. Um, and I don't know what they do. They use a metric to see what stocks go in there? What do they use? Like
If I'm
how can
not
I?
mistaken,
Like, obviously, I can look at a chart and see like how volatile it's been in the past week or month. But is there a metric?
there actually is. There's a way that you can compare a single stock to, or even a fund. You can compare it to the S&P 500 or another index.
Oh, tell me a bit.
Usually it's usually it's going to be the S&P 500, and that's what's called the beta. And
Beta.
that is not like and that's like the beta fish, beta BETA, the Greek letter thing, frat, I don't know. But what that number is it represents its volatility against the entire S&P 500. So, for example, a stock with a beta. Oh, I'm sorry. Let's start with the S&P 500 has a beta of 0 because obviously it is the metric, it is the benchmark. Um, and then if it's above 0 and it goes from either 1 to -1, if it's above 0, it is more volatile than the market. So if it's a zero point 0.2 beta, it is 20% more volatile than the market. And if it's a negative zero point 0.4, it is 40% less volatile than the market. And that's a quick, instant way to kind of gauge how much that particular stock moves. Because there's a lot of stocks out there that always hold their value and they just never really go up and they never really go down. And they have a significant lack of volatility and basically are meant for like income portfolios or big blue chip dividend reinvestment stuff.
Yeah. Okay. So you want to say that high volatility is better for a more riskier portfolio.
Absolutely. Absolutely. Just because something's volatile doesn't mean it's bad. Volatile doesn't mean down. It can also mean up.
Okay, I will
Volatile.
agree, but it means more risky in general. And when you talk about low volatility stocks, um, I'm thinking, I hate to say this, but safer stocks I feel like it's not going to have as much growth potential, but it will be a less risky investment.
Hmm. The risk factor always goes back to the underlying asset. Okay, what company am I buying? Okay, Coca Cola. Okay. If you tell somebody that they're gonna like to go buy Coca Cola, they're instantly, and they're uneducated, they're instantly gonna say, "Oh, you never know, stocks go down. I don't want to lose all my money." The only way for you to lose all your money is for Coca Cola to go bankrupt, to never ever sell another Coca Cola ever again.
But
And
that's
quite
really,
frankly, that's never going to happen.
I feel like that's relative to how much money you're putting in. If you put in
Well,
$50, you only have $25 if it cuts in half. But if you put in $1 million, now you only have $500,000. See what I mean?
mhm.
So I mean, you take volatility at your own risk.
Yeah, and like I said, it all goes back to the underlying asset. It's what are you buying? Are you buying Coca Cola? Or are you buying Turtle Beach? The Turtle Beach, of course, that's a company that is just so shaky. We have no idea what's going on. They're probably on the verge of bankruptcy. There's so many competitors out there that do cheaper things for way better. So they're probably going to go bankrupt, and yes, you will lose all your money. But if you park it in, give me a company, Nate, give me a blue chip.
Johnson and
Park,
Johnson,
yes, if you park it in Johnson and Johnson, one of the largest pharmaceutical company,
biomedical.
and
They have
biomedical,
housewares.
and they have household supply divisions.
Oh, that's weird.
Yeah, your money will be there. It's a safer, less volatile thing. However, last year's winner, Nvidia, was one of the most volatile pieces of shit when it started, and it became even more volatile as she ticked up over like 212% over the course of like 2 years. It was ridiculous. So volatility is not always a negative thing. Yes, it is risky. Risk can be negative, but you put that risk in your favor and you can really leverage your gains. And that's what the game is all about. Go for that little bit of extra risk.
I agree. Um,
I was going to say, what do you think about that, Nathan?
I just feel like I'm more inclined to pick low volatility stocks. If I ever am using high volatility stocks like Turtle Beach, then I won't use my life savings or
Mm-hmm.
my under the weather check, or what is it called,
Mm-hmm.
rainy day fund.
Rainy day fund.
Yeah.
So you do what we call position sizing. You asset you blah blah blah. You allocate certain parts of your portfolio into certain assets that are more or less volatile. So if you want to take on a trade, let's say you looking to trade the Dow for the day, you might take a 7 to 15% of your portfolio for that trade, whereas for
I do
Turtle
probably
Beach,
less than that.
you might do about 3%. I'm just using
Oh, okay.
numbers,
Then yeah, if I
really.
was gonna do that, I don't know. Even like a
You
day
might
trade,
use
even
3%.
like a day trade, I feel like it's gonna still have more volatility than it is in like a long-term position.
Hmm.
So I think regardless of what stock I'm using, I'll probably still stick with that lower percentage. 3 to 5% maybe.
Yeah.
I
So
don't
you
know.
position size based on risk, which is obviously one of the smartest things you can do. You want to position size everything 100%.
Yeah.
So that's volatility in a nutshell. Is anything else you want to add to that, Nate?
I mean, do you have any other favorite volatility stocks?
Like just volatile things that I like to watch?
Mm-hmm. I know one that's been really volatile lately is DDE. That's one you like to play back in the day.
Yeah, I mean, yeah, I don't really do that one anymore. I
It
don't
went,
really.
you know, it went
She's
up
just too
from like
blah
a
for me.
dollar oh seven to $1.30. Doesn't that make you
I mean,
sick?
it does make me sick. I looked at their actual company one time, and it just not good at all.
Dover
Here's
Downs
here's here's
Entertainment,
one I
right?
like to play. I wouldn't really say that she is volatile, but she has more volatility than your average stock, and that would be Groupon.
That's one of the free stocks Robinhood gives you.
Yeah, it's really not a great stock. I
Ticker
do use
symbol
it to trade
GRPN.
because her patterns are just so easy to identify. I mean, you can just pull up a chart right now and you can just look at all these swings.
Yeah.
Like it's just her patterns are so easy. So I do play off a Groupon every now and then, but I position size accordingly. I will never put more than about 3% into any one trade, and that's if shit hits the fan and I need to dig myself out of a hole. So I when I'm actually going for an initial profit trade, I only put about 1% in there.
Yeah.
But I do watch that volatility because I can lock in more gains there than I can parking it in, the S&P or Berkshire for the week. Locking in several gains off of volatile moves, click, click, click. You made money 3 times rather than hoping it goes up over the long term. So
Volatility, man. Yeah, but
put the volatility in your favor.
yeah, when volatility
Makes
works, it feels great, but when it goes the other way,
it's
it
shitty.
stabs, man. It hurts.
It's shitty. Well, when you get more advanced, there's ways to play the downside.
Yeah.
You know, there's ways to play those down moves, through short selling and put options and other intricate devices like inverse leveraged ETFs.
Mm.
So there's ways to play that downside so that your volatility doesn't screw you in the ass. One of my favorite things about volatility is that it can make option prices. Oh my goodness, what volatility on stocks does to option prices. Buying things at 3 cents and selling them at $3 later that day. I mean, you think about it, you laugh about it, but it's true. I the other day I did this very, volatile, this um out of the money QQQ put. It was for a 149 put, and she was already at 157. So it was for like end of the week for her to go down $8, another $8. Like for it to go through, the Nasdaq would have had to just get pummeled again. But uh I traded it from 6 cents to 25 cents. But that's times 100. If you don't know options, I traded from $6 a contract to
We'll have an option.
$25.
We'll have an options episode.
Oh, options episodes, absolutely. So I
Okay.
made $19 on every contract, but it was just so out of the money, and the Nasdaq had this huge, large drop down to about 156, and it started to make me so much money because of this volatile swing, and then she ended up for the day, but that volatile swing in the morning made me tons of money. And then I also profited on the upside when she ticked back up to about 159. So I profited on both the 165 and the 149, the put and the call on the same day. So you can put volatility in your favor to make money, and it's a beautiful fucking thing.
Sounds great, man.
I love it.
Well, I mean, we can call this a short episode.
We can call it an episode. Volatility. It's something to watch out for, but it's a thing that we have to live with. And if you are a stock trader or want to get into stock trading, you know, volatility is something that you need to live with and accept
Yeah.
and learn how.
If you're in it for the long run, there's no avoiding it.
Oh yeah, there's no. But if you just plan on being the set it and forget it investor, you have to ignore the daily, weekly, even monthly volatile swings.
Put your
The
emotions
Nasdaq
to the
dropped.
side.
Absolutely, absolutely. The Dow dropping 100 points or 300 points in the session, that means nothing if you're a long-term investor. If you just plan on buying the Dow or the S&P, that means nothing. Don't pay attention to all the news. Your plan is to stay in for the long term. You're playing the U.S. economy. You're not playing the trading game. You're not Wall Street.
That makes me
You're
sick
playing
thinking about it like that. Playing the U.S. economy.
you're playing the U.S. economy over the next 20 years. I think your money is fine. But if you're a trader, volatility is your game. Speaking of volatility, during the span of this conversation, Bitcoin has gone up $110.
Disgusting.
Yeah, shedding from her 6% down for 24 hours to 4%. So if you bought Bitcoin while you started this podcast, you just made 2% on your money. That's volatility, baby. That's the lesson. That's it. We can just end on that.
Beautiful. Well, guys,
Beautiful.
it's been fun. Thank you for listening. Again, my name is Nathan Oliphant, and this
Hey,
is the gluten-free Jason Bessing.
what are we watching this week? You didn't do it. You
Oh
always
shit! I'm
forget.
sorry.
You always forget.
I'm so eager, man. I don't know.
You're eager beaver. You're just ready to end this short
I
episode.
want the
You
weekend to be
thought you were getting
over.
off early.
I want the weekend to be
Dude,
over, and we can say our
this
catchphrase, and we can get out of here.
this week did kind of suck, and plus there was no trading today. Uh,
Stupid.
oh, when we get offline, I'm going to talk to you about a new trading strategy. I'm going to try.
Uh-oh.
See what you think. See what you think about it. But
OB
yeah,
Capital
Nathan,
Secrets.
what are you watching this week?
I'm watching Coca Cola, ticker symbol KO.
Why is that?
I bought a end of the week call option for what is it at right now? I'm sorry. For $44. Um and it's at 43.37. So it's got to go up what, 60 cents? 63 cents by the end of the week for me to make,
So
I
you think
guess. So
you
hopefully
think
it'll
she's
go
going
up.
to revisit her highs?
Yeah, I think it's going to happen. Play the volatility, baby.
It, before I say mine, we really are in a period right now at the this time of the podcast that says almost any stock is a buy right now after that correction we just had. If you're comfortable purchasing more of some of your favorite stocks to hold long term, I think this is a great time to do it. And that kind of segues into my stock that I'm watching, which is MGM Resorts.
Oh, I was looking at that today.
See, you were looking at PEY that one time, you're looking at
I
MGM
know.
now. We're great minds think alike. MGM is one of my favorite companies, both a stock and in real life. Um, they own hella hotels,
And
both in
casinos.
Las Vegas, and mostly in Las Vegas, and also around the North America, the rest of the country, and starting to expand into Macau. So they have lots of growth potential. They pay a small dividend. It's only about 1%, so it's nothing fancy. But she keeps charging up after earnings. She keeps, just ticking up and up and up. And I think she is headed to 40 by the end of June. So I am looking at the 40 MGM call for around that time frame.
Okay.
And she's at 35 now. I bought a call option at 34 that I'm looking to get out of. So I'm looking for her to revisit her high, and I think she's going to have no problem going to 40 by the end of June and possibly 43, 44 by the end of the year. Um, so yeah,
That sounds
MGM,
good.
$20 billion company,
They pay
good
any
volume.
dividends?
It's about 1.3%. Nothing to get excited about. You're looking for the growth in this bad boy.
Bad boys.
So I think she has no problem looking to revisit these highs.
All
A lot
right,
of growth
well,
potential.
want to wrap it up?
Let's wrap it up. Tell them where they can find us. Tell
Well,
where can you at
we
us, bro?
we can email us at Rebel Trading Group. That's two G's at gmail.com. Rebel Trading Group at gmail.com. Check us out. Of course, you're on YouTube. That's the only platform for here. Again, I am Nathan Oliphant. This is the gluten-free Jason Bessing,
The gluten-free
and this has been
Jason
our
Bessing.
Rebel Trading Podcast episode 6 on volatility.
Yeah, volatility. Put it in your favor. Play the game.
Yeah, is it Monday yet?